Hello, and welcome to What is the Matter, where we discuss money matters. Today, we will be looking at what happens to your property after you die in Singapore. Today's topic is very somber because it is about death. I resisted not sharing a joke, but to make it more lighthearted, here goes. Why did the will cross the road? To get to the beneficiaries on the other side. From this video today, I am sure some of the information may shock you and may not be what you expected. And I bet a lot of people would have thought otherwise. Watch on. For many Singaporeans, their properties represent a significant portion of their wealth, prompting the desire to will these assets to their beneficiaries. Recognizing the high value of property as an asset, they wish for their loved ones to benefit from its value. This underscores the importance of proper estate planning, which involves drafting a will and managing financial assets. While discussing and contemplating matters related to death may be challenging, it's crucial to address them. By doing so, we can ensure that our beneficiaries can maximize the benefits and avoid any potential liabilities, financial difficulties, or additional emotional strain in the event of our unexpected demise. In the event you, a co-owner, pass on, the distribution of the remaining co-owner's share of the property depends on the type of ownership, whether it is held as joint tenancy or tenancy in common. Under joint tenancy, all co-owners equally own the property, regardless of their individual contributions. For instance, if there are two joint owners, each would own 50% of the property. In the event of one owner's passing, the right of survivorship applies, wherein the deceased's share automatically transfers to the surviving owner or owners, irrespective of whether the deceased left a will. Under tenancy in common, the deceased owner's share of the property is distributed according to the deceased's will, if one exists, and not automatically to the other co-owners. In the absence of a will, the court appoints an administrator to oversee the distribution of the deceased's estate based on Singapore's intestacy laws. Therefore, it is very important for you to check if your current property is under a joint tenancy or tenancy in common, because it will affect who the beneficiary is. Stamp duties are levies imposed on property transactions. In Singapore, beneficiaries do not need to pay stamp duty if they inherit a residential property through a valid will or under the Interstate Succession Act or the Administration of Muslim Law Act. However, stamp duty becomes an issue if your property is willed to multiple beneficiaries and they want to transfer their inherited portions of the property among themselves. Disagreements among co-inheritors on property management may also lead to disputes. For instance, Mr. Tan bequeaths his house to his two children, with the elder child, Jack, already owning a property, and the younger child, Jill, still residing in the inherited house. Stamp duty fees will be incurred for Jill, regardless of whether Jack wishes to transfer his inherited portion without charge or sell it to Jill. This is also an important factor you should consider. When your beneficiary inherits your property and decides to sell it, the need to pay stamp duties hinges on the time of your property acquisition, rather than the inheritance itself. Beneficiaries must settle a seller's stamp duty, SSD, to proceed with the sale of the property if A. The deceased obtained the property after 20 February 2010. B. Property is sold within the stipulated holding period of 3 years. The holding period denotes the length of time the deceased possessed the property. The specific amount of SSD to pay differs depending on both the holding period and the acquisition date. When considering leaving property to beneficiaries, it is important to note if your property is not fully paid for yet. For the first case, the mortgage was signed solely by the deceased. The beneficiaries, who are not the co-borrowers, will not inherit the mortgage since they are not legally obligated to repay the deceased's mortgage. However, the downside is that the beneficiaries would not retain ownership of the property, as the executor or administrator of the deceased's estate will need to sell it to settle the mortgage. To illustrate this, Mr. Lim bought a property valued at $800,000 Singapore dollars in January 2023 and is the sole borrower on the property's mortgage. He has a remaining mortgage balance of $600,000 Singapore dollars. Mr. Lim unfortunately passed away at the age of 49, intending to bequeath his property to his only family member left, who is his 20-year-old son, Alan. Alan, who is still a student, does not have any income and is not a co-borrower on the property's mortgage. Following the bank's evaluation, it is possible that they may conclude that he has failed the total debt servicing ratio criteria and will be unable to inherit the mortgage and the property. For the second case, if the beneficiary is a co-borrower on the home loan alongside the deceased, the beneficiary will inherit the mortgage obligations as if they were the sole borrower. In Singapore, being a co-borrower entails being a joint mortgagor and joint owner. Consequently, the co-borrower assumes full legal obligations for the mortgage, irrespective of arrangements with the principal borrower, the deceased, and regardless of whether the co-borrower contributed installment payments or solely provided their name, income, and age for loan approval purposes. Subsequently, banks will assess the co-borrower's capacity to manage the full mortgage repayment, considering factors such as the total debt servicing ratio, TDSR, to evaluate credit risk. TDSR is equals to borrower's total monthly debt obligations divided by borrower's gross monthly income multiplied by 100%. The bank will analyze the beneficiary's income and existing debt obligations to determine if they can manage the debt. If beneficiaries do not meet the TDSR requirements, they cannot inherit the mortgage and consequently cannot inherit the property. To assist in easing the financial burden of your co-borrower when they inherit the mortgage should you pass on, one can consider getting mortgage insurance. Mortgage insurance can partially or completely cover the mortgage payments. If your property is a HDB under HDB loans, if borrowers opt to utilize their Central Provident Fund, CPF, savings to repay the mortgage, they must apply for the Home Protection Scheme, HPS, mortgage insurance. Even if borrowers choose cash payments for their mortgage, they remain eligible for HPS coverage. With HPS, in the event of the principal borrower's demise, the CPF board settles the remaining mortgage, inherited by the joint borrower, with HDB. For private bank home loans for HDB flats or private properties, they can be safeguarded by mortgage insurance known as Mortgage Reduced Term Assurance, MRTA. In the event of the principal borrower's death, MRTA covers the outstanding mortgage balance. The co-borrower simply needs to liaise with the insurance provider to initiate MRTA payouts. Without adequate financial planning and resources, many co-borrowers may not have the capacity to manage such a significant debt on short notice. Seeking guidance from professional home finance advisors is crucial to determine the most suitable course of action tailored to their financial circumstances and requirements. This ensures they are equipped with the necessary information and support, preventing them from feeling overwhelmed or unsure about how to proceed. If your co-borrower is unable to afford the remaining mortgage, several decisions or outcomes may take place. A. Selling off the property. If the co-borrower has no intention of retaining ownership of the property, they may consider selling it to a buyer in the open market. However, this process can be time-consuming. During this period, the co-borrower would either need to maintain the mortgage payments or engage in discussions with HDB or the bank regarding potential options, such as loan deferment or temporary payment reduction to extend the payment time frame. This is all subjected to approval from the respective institution. B. Refinance loan. Should the co-borrower wish to retain ownership of the property for personal reasons or seek a temporary payment reduction while endeavoring to sell it on the open market, they have the option to refinance their loan with the bank. Through refinancing, they can negotiate more favorable mortgage terms such as the interest rate structure, tenure length, repayment schedule, or total costs. This adjustment would better suit their budgetary constraints and enable them to sustain mortgage payments without breaking the bank. C. Find another co-borrower. If the surviving co-borrower intends to continue meeting the mortgage payments, they could bring in another co-borrower to share the financial responsibility. However, the process of adding a new co-borrower involves several steps and prerequisites. The potential co-borrower will need to meet the stringent eligibility criteria, including acting as a guarantor and undergoing assessments of their TDSR and credit score. Additionally, adding a new co-borrower to an existing mortgage may require refinancing based on the combined financial capability and TDSR of all parties involved. Administrative tasks and associated costs are also part of the process, and most importantly, the surviving co-borrower must feel comfortable and have trust in the new co-owner. as they will share legal rights and responsibilities concerning the property. D. Foreclosure of property. If all else fails and the surviving co-borrower finds themselves unable or unwilling to fulfill the mortgage obligations and persists in defaulting on payments despite repeated reminders and warnings from the bank may resort to its final option. This entails initiating foreclosure proceedings on the property and selling it through auction to recoup the outstanding debt. The specifics of this process can vary depending on individual circumstances and may differ among banks. You know, dear viewer, Mr. Huat is the matter aims to provide entertainment and education to promote financial literacy. By you sharing and liking this video, it really helps me in getting my videos spread further and making me more motivated to come up with research on these topics. Kindly subscribe, share, and like if you like my videos to Huat.